but it would be insane, in my opinion, for them to cut rates while the NASDAQ is approaching 20,000. The S&P could go to 6,000 because we have a melt up. So if anything, they'd have to raise rates. And that would really put the cats amongst the pigeons, because people would lose total faith and confidence in the Fed. Friday, February 23rd, 2024, Maneco 64, home of alternative economics and contrarian views. So today we're going to look at Captain Powell, Jay Powell, Chairman of the Federal Reserve, and other captains out there of other central banks, and why they might be flying blind, in my opinion, and it's a serious situation. Yeah, and let me know what you think about my theory here in the comment section. And talking about the comment section, today will be a pretty interesting video, because I'm announcing a giveaway, and I have to thank Blue Water Stacks for organizing this. He sent some presents to give away. I've added some of mine as well, and there's a few rules that I'll tell you about right now. And this is, of course, to try to get the channel to 100,000, even though it's really not something that is a priority to me, but at least it helps me give something back to you guys. And of course, I have to thank Blue Water Stacks. He's giving some back too. Yeah, so the system I'm using to pick a comment, and that's how it's going to work. I'm going to pick via a comment picker program one comment, and they can't distinguish whether you're a subscriber or not. So what I ask you to do is you need to be a subscriber, or else I'll have to do the draw again. And if you don't want to subscribe and you want to enter the draw, you can subscribe and unsubscribe. I don't care, really. But hopefully an old subscriber will win, you know, but it's chance, of course, and there will be only one winner. So the second rule, aside from having to be a subscriber, is that you write in capital letters hashtag road to 100K, road to 100K, hashtag road to 100K, all caps. And then you also need to write another comment, is hashtag all large caps, Rudy the Silver Ranger. Yes, that's his nickname, Rudy the Silver Ranger. So you can see everything here below on the screen, and you have to write both hashtag comments. And on Sunday, I'm going to announce the winner during the live stream. So if you want to find out if you won, you have to come on the live stream on Sunday. Well, and now to what's going to be given away. I'm going to start with what Blue Water Stacks sent, and he sent two silverbacks, or sorry, goldbacks, New Hampshire gold. There's a New Hampshire gold back, and there's a Utah gold back, gold back. And each one of these has 1/1000th of a troy ounce of 24 karat gold. So it's like a gold note. So we got two of them. And Blue Water Stacks also sent a 1 ounce silver Johnson Matthey bar. So you're going to get that too. And I said I've added some stuff on. So I've added 1 ounce Silver Eagle, I think it's a 2023 one. Yeah, 2023. And I've added as well 1/20th of an ounce gold maple leaf. So they're both together here in this. So you're going to get this. And finally, you're going to get a silver coin balance as well from me. So that's it. So yes, hashtag road to 100K, hashtag Rudy the Silver Ranger, and you have to be a subscriber or else I'll redraw it until I get someone that's a subscriber. So back to the central banks. And I'm always thinking a lot. Yeah, maybe that's why I do these videos, to try to get my ideas out there and talk to you guys. And yes, ever since, let's say 2002, when Ben Bernanke made that famous helicopter speech, and by then I already had started buying gold. I think I bought gold 6 months prior to that speech. That speech was in November, and I started buying Krugerrands in the summer. I had read up a lot on the history of money, the history of gold, inflation. I had read up already on fiat money inflation in France, which is a great book. I'm going to put a link to it below in the description. And when Bernanke made that speech, what really raised red flags for me was when he said the U.S. government has, and by U.S. government he meant, you know, not just the Treasury, but also the Fed, because the Fed is a hybrid agency of the U.S. government. He said the U.S. government has this technology that basically doesn't cost anything, that you can just print money or reserves out of thin air. So you can basically eliminate the risk of what he called deflation. And here is where it becomes murky. I think what the central bankers mean by deflation for the public is a negative CPI, but for them, they know that if the amount of loans and credit and currency in the system starts shrinking, that's really bad for them. And I think that's what he meant for the insiders. But when he made that speech, I knew that we're going to be in the situation that we're now. I just didn't know how long it was going to take, and I think we're there. The melt up, right? And I think they've been, you know, so clever. And what do I mean by that? Well, they've manipulated people's perception of what inflation really is. First, by changing the definition of inflation from the inflation of the currency supply out of thin air, faster than the growth of the economy. And they've said that inflation now, and they've been doing this for over 3 decades, I would say, is the measure of the consequence of that increase in the amount of currency and credit. It's the CPI. And the problem with the CPI is that they've been tinkering with it to make it look lower and lower. And why do they want to make it lower and lower? Well, because the central banks ultimately, and the government, hopefully you should know by now, but if you don't, look into it. I might talk about it later. They're all in bed together, and they're there to extract wealth from the general public. Is it any wonder that the bottom 50% of the public in the U.S. has almost no wealth, and the Fed publishes that data, as you can see here. But of course, they don't want you to know. Jay Powell goes up there every press conference and say, our purpose is to help the American people, to make sure unemployment is low and that we have stable prices, full employment, economic growth, all that spiel. But deep down, his masters are his priority. And they have to make it look like inflation or CPI at 2% is normal, even though if you look at 2% over 40 years of currency debasement, the value of a currency halves. So yesterday I tweeted this out. CPI has been manipulated so much in the last 35 years and also used erroneously as a measure of inflation instead of M2 or M3. I said M3, but also M2, that the Federal Reserve might actually be flying blind into a crack up boom event. Conclusion, interest rates are way too slow. Yeah, you might think because you've only been around as an adult since 2008 or 9 that rates near zero are normal, but they're anything but. So you might be thinking that 5 is too high, but when I started out in the financial business, I remember 3-month interest rates over 7%. We're getting close to that. But don't forget, back in the early 80s, they got up to 20%. So what does this mean then? Well, it means that they've believed so much in their scenario that there's no currency debasement, there's no inflation, and they've managed investors and speculators and economists' perception that inflation is really low and that these interest rates at 5% are actually high enough to calm things down, to bring the inflation down. And by inflation, I don't mean the CPI. I mean the creation of currency and credit. Yeah, they are so much, they believe in it so much that they've forgotten that it's completely bogus, or maybe they are doing this on purpose. A lot of people think that it is on purpose to destroy everything, to destroy the currency and bring in a CBDC. It could be because of that, but be as it may, it will happen no matter what, in my opinion, and that's why I think they're flying blind. So I think, of course, we don't need to be scared because we know what's going on, and hopefully we'll have some insurance. And that's what you do when you see a storm coming, or when you buy a house, you buy insurance. When you buy, I remember I went on a trip with my dad on his boat, really long ocean cruise. We went all the way from Brazil to the Caribbean. And we needed insurance. Lloyd's of London. You need insurance because you never know what if you're going to face a really bad storm. That's why you need fire insurance. That's why you need life insurance for your loved ones. If you happen to, expire unexpectedly and too early. So hopefully you are prepared with some of this, and the winner of the draw or the giveaway hopefully will be a little more prepared as well when they get the silverbacks in these, and of course this will help somewhat, not totally, determine whether the coins they stack are real. So and again, as I said, I saw this coming in 2002. And I thought 2008, when I was sitting in front of my desk at work in the city of London, that was it. The system was ending. Lehman had collapsed. Morgan Stanley was going to be, Merrill Lynch was going to be next, then Morgan Stanley. They're all dominoes falling. Goldman Sachs, JP Morgan, sitting in front of my screen watching all those bank stocks collapse. And that was, looking back in hindsight, that was not a collapse, I guess. It wasn't the end because they hadn't made the bubble big enough yet. It was just a housing bubble. So they saved the system. And I was prepared at the time, but I thought at the time, well, they should have let it all collapse, but it wasn't enough for them. So they've inflated the bubble again. And here we are, 16 already, 16 years later, and they're inflating, I think, the mother of all bubbles, the everything bubble. And Nvidia and other assets out there, like Bitcoin, cryptocurrencies, are just a symptom of that. And I don't know how much longer that's going to keep going. But one thing's for sure, I think when that turns, we're going to see the major crash. The whole system will implode. And whether it's by design or not, it doesn't really matter. It doesn't really matter as long as you're protected. And if you want to help the channel as well, and you're looking to continue to protect yourself with gold and silver, go to the description of my video. You can help by using my affiliates, even though I always tell people to do their homework and get the best deal with the most reputable dealer as possible. So let's get back to the markets, or go see where the markets are this morning. It's just about 8:30 a.m. London time. Yeah, gold and silver, of course, have been going nowhere this week, which is strange, or not strange, but it's insurance, as I said. If you're looking to trade these to make fiat currency gains, that's another game. But we look at the price of gold and silver anyway, because they're money, and we need to know where things are. We're 2020, actually, gold is down $4. High's been 28 and the low has been 18. Silver is at 22.65. It's down about 11 cents. High's been 86 and the low 59. The stock markets are actually not doing anything, even though we've seen some big gains in the last couple of days. So I won't go through them, nor are the currencies really. Let's see what the commodities are doing. I mean, crude oil is still hovering around this 77 level, even though right now we're at 78, and it's down 0.75%. So that's been ticking up. That's WTI crude. Brent as well is at 82.33, down about 0.2%. Platinum is still around 900, so pretty steady. And copper is down 0.6% at 388. And this is what might be an indication that the central banks are totally they're totally miscalculating how badly they've inflated it, and it's the bond market, because the 10-year yield here is going back up, and we're testing that 433 level. And we need to keep a close eye on that. So, because if we close, let's say at 440, that could bode badly for the Fed. And as I said, rates might be too low. You know, there's all this talk about the Fed cutting rates this year, but it would be insane, in my opinion, for them to cut rates while the NASDAQ is approaching 20,000. The S&P could go to 6,000 because we have a melt up. So if anything, they'd have to raise rates. And that would really put the cats amongst the pigeons, because people would lose total faith and confidence in the Fed would lose its credibility. And of course, for me, central banks have no credibility, mainly mainly because they seem to think that they're God, that they can determine what the rate of interest should be for trillions or billions of people on the planet. So there you go. That's how I see things. And with that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.